Abundance Stock Advisors. Let's make money.
Hello friends, welcome to the 14th English episode of our Brahmastra series. To get notifications on all future episodes, please subscribe to our channel and press the bell icon. So friends, the Brahmastra for today is: many traders ride an emotional roller coaster and miss the essential element of winning, that is, the management of their emotions. Friends, stock markets is a very psychological game. Now, there is a very special theory which is called as a Dow theory, on which the whole technical analysis is based. And we have a full video coming up on it next month. So stay tuned. Now, friends, listen carefully. The theory says that trends in the stock markets keep on repeating. And you know why they keep repeating? The answer is because of human emotions. That's strange, but yes, that's the truth. Human emotions like fear, greed, hope, pride, etc., they affect the marketplace. And market participants always provide a consistent reaction or a consistent emotion to a similar market situation over time. Example, whenever market participants get fearful, they sell. And whenever they hope, they buy. Now, have you heard people saying that so and so stock was 50 rupees, say 2 years back, and now it is 500 rupees? That's like 10 times in 2 years. Now, let me ask you this question. How many investors actually bought this stock at 50 and sold at 500? Friends, answer would be almost zero. And why? It's because of not managing emotions well. And this leads to crazy decision making. Let's see a live example. You bought this stock with a lot of hope at 50 rupees, and in no time, it was trading at 100 rupees. Some investors sold here due to the emotion of fear of the stock falling and they losing their profits. Some investors remained hopeful, showed courage, and the stock rallied till 200. Again, some hopeful investors sold here due to the fear of losing on the 4 times profits. Now the stock rallied till 500 and the investors who were hopeful were very happy. They now became greedy that the stock would rally further. Some new investors jumped in as well and bought this stock too at 500 rupees because of the hope and greed that the stock would rise further. The stock started correcting and fell sharply in no time. Investors didn't sell it due to hope. They felt the stock could rally further anytime. But friends, the stock fell further. Now, because the stock corrected heavily, investors became hopeful again that now the stock had no option but to rally further. They continued to hold the stock and the stock fell further and crashed. Now, because of continuous fear, hope, greed, new investors made heavy losses while the initial old investors could make very less profits. In the process, nobody actually took advantage of the massive rally that the stock was in, and nobody could buy the stock at 50 rupees and sell it at 500 rupees. Emotions finally ruled everybody. Friends, stock markets is all about keeping your emotions aside and approaching the markets with discipline and strategy. You need to enter and exit at the right time without getting on the emotional roller coaster ride. Only then you win. So how about buying here and selling here? Yes, it's possible with technical strategies. Friends, let me repeat, emotions have no role in investment. Let your emotions be there only for your family. Friends, there are many such amazing videos on our YouTube channel. You should definitely watch them. Next week, we will load you again with yet another Brahmastra. Until then, happy investing.